All right, this is our short-term view for the coming week. We're going to look at the stock market. Before I get into that, I just want to tell you a couple of things. We are going to be putting more things in our level 1 membership. There's some really good surprises in there where we're creating some things at no cost that really will support people learning about the markets and people interested in being able to access easily a lot of other sites. And well, we really want to pay it forward for all the success that we have and really make it easy for a lot of people to become part of the askSlim family. So become a level 1 member, and then you can we'll start to see things. Already there are 6 free videos in there. You'll be able to see my recent gold analysis and why I think gold stocks may be ready for a big move, and also my big picture analysis in the stock market that talks about history of corrections and why I think it's a 2,000 point decline coming soon in the Dow. So you're going to want to watch those. Just go to askSlim.com, sign up for level 1, no cost. And you'll be able to access that, and lots of good surprises coming also. And I also want to ask you to share this video. You like what we bring, you think it's valuable, you know people that are in the markets or trying to get in the markets, or like you think would enjoy some of my commentary. Just share the video on YouTube and send it to other people, and that would help us a lot. And don't forget to put a thumbs up and tell us that you like it. We have lots of other things in askSlim. You can go to the membership page and learn about all of our memberships. We've got some specials. You want to hear about them, you can write me about that. So be sure to become a free level 1 member, and also to share this video. All right, so now we're going to take a look at the S&P 500. Now I got to tell you that I do a much bigger video on this right after I finish this show for all of my members. I don't even want to tell them how poorly I did in the last week, because it's like I got cross-ruffed. I mean, there were so many things going on in the markets that move things in directions differently than I expected. Actually expected the market weakness that we started to see this week, and maybe resuming here on the close on Friday, I expected that to come in another week or a little further out. But now it seems like it came already, and all of those things really affected the markets differently than I expected. Now, what I said for the stock market last week was that I thought it would come down and then move up. Well, basically it did that, right? I mean, I thought it would be down early in the week. It took till Wednesday till we got the break, and then we got the rebound. So the shape of the market what I was looking for. But the amplitude of the decline and the rebound was nothing like what I expected, and sends strong messages clearly. So we're going to take a look at that chart of the S&P 500, and then we're going to take a look at what we think is coming in the next week. So here is that bear kicker pattern again that I showed you. I mean, that is a very significant pattern. That shows a sentiment change in the market that couldn't happen unless this pattern right in here was actually rolling over. That's the message that we get out of that. That is very important. I would say the probability of that being wrong is low. Of course, there's always a probability of that. And I'm certainly wrong enough periods of time. But this one really looks to me like there's trouble out there. So there are 2 scenarios that I have in here based on what you see in here, and they're both bad. Typically, when you get a move up and fail in these minor resistances, as we're doing here on Friday, you get further downside after that. And you tried to get into the gap, and it can't. The fact that it got down near the 78.6% confluence area there is bad also. If this is the pattern right in here, then it fails in here and then comes down. If, these are big ifs, right? If this is the rally, in other words, that's this right over here, then it's already failed and coming down. So all I see is a bad scenario in here. We're going to call this next week a down week, and that the risks are very high and that it can accelerate on the downside. If it were to move to the upside first, which of course is a possibility, you can see that little line right there. I can get a little closer look so that you can see it right here. That is right around the area of 23.94. Now it got up today to about 23.89. It doesn't have to get there. It might get there, but then we think it would roll over from there, or we think it doesn't possibly not get there, and then that failure is in hand, and then we move down again. We expect this kind of action right in here that you see right there, and if we're right about the primary trend or the intermediate trend switching to the downside, it would look like this. So a decline sometime next week, some kind of a rally into the following week, and then another decline right over there. So that's us following this, but then using the downward trend that we see to skew the cyclical patterns. So that would call for downside in the market, and we think that that is highly likely for the next week. I think. We'll see. And of course, everything I look at is just simply the weight of the evidence. And I would say I'm right about maybe 60%, 65% of the time. That's a pretty good edge. And I hope that if it's right, it works for you. And if it's not, well, that you can see that and kind of step out of the way. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel and also go to askSlim.com and become a Level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy it.